Despite a minor fall on Dalal Street this week, India outperforms its global peers. Friday's gain of 2% helps cut its weekly losses. IT, realty, metal fall the most. On this week's edition of Editors Roundtable, we decode the week on Dalal Street. We tell you how markets around the world reacted to Trump's trade tariffs. We put the spotlight on the IT sector earnings, and we'll tell you what to expect from the rest of the sectors. I am Reema Tendulkar. With me, Prashant, Nimesh and Nigel. And joining us in the newsroom, we've got Mahesh Patil, CIO, Aditya Birla, Sun Life AMC. Hi guys, TGIF. What a week, right? What a week. It's historic in terms of headlines, gyrations, volatility, the bond market meltdown.
In a strange way, today actually seemed slow. Because it was just one way. We started higher. It was not like zigzag.
Yeah, we had a gap up and then we've just stayed there.
Yeah. Because the last few days it's been
Crazy.
up 7, down 8, up. So today was calm, and I hope it stays like that now for the next few days.
It's been quite a roller coaster ride for us and global markets.
Well, that's right. Normally you could say I went home and I didn't look at the screen at all. You'll be lying if you said that this week, because you had to look at the screen at all points of time.
1 or 2 days, Prashant would have not even slept overnight, right? I mean, so much of Trump announcements, watching all the bond market and all.
No, I'm telling you, Nimesh, it reminded me of all the
2008,
and back then, of course, I mean, it was different, but it had those vibes for 1 or 2 days, and it passed quickly. So,
but here, this time there's too much of uncertainty.
Too much of uncertainty.
There it was like, right? I mean, you don't know what to expect. I mean, that was the biggest challenge.
The biggest in that sense, the head fake was that headline which came on Monday. It was right. They said that they're going to pause. Markets went up low to high. It went up 8%. Right. And then, of course, within 30 minutes, inside of 30 minutes, there was that news which came.
That is fake.
That it is fake news. So now people are wondering whether it was actually fake or it was a trial balloon by the White House to see how markets would react. And now actually, they actually went ahead and did it. But
I mean, bad for traders, I would guess, But I think it's a good opportunity for investors, right, long term, because you get prices at levels, right, where you want to buy.
So you shop, Mahesh, at a fund house. You'll have been buying. What have you been doing in this volatility?
Yeah, so I think in this volatility, I think during the market fall, I think steep fall, I think stock prices, which normally good stocks, right, they're out of your reach sometimes because of valuations. I think this is the time to buy those stocks, because see, your market value of a stock doesn't change, right, because by 1 or 2, 3 quarters, even for 1 year, the earnings are slightly, right, because a lot of value comes from terminal value, and that, assuming that picture is intact, say a 10% correction or 15% is a good opportunity to buy.
Right.
So what have you been buying?
No, so I think we've been looking at some of the domestic plays, whether it is consumption, for example. While it has been a underperformer in the last whole year, we think that this year, it can look better because rural economy is starting to look up better. Monsoons are going to be good, right? There's some stimulus in the budget for the tax relief next year, the pay commission. So look at sectors which have been underperformed in the previous days. Not much of a froth over there. And where they could turn around, I think those are the sectors which we would look at. But I think it's more stock specific.
All right, Mahesh, before we throw a few more questions to you, just want to give our viewers a quick check of what went on during the week. We started the week looking at Black Monday that turned into Green Friday by the time we ended. And we ended the week more or less flattish. At the start of this week, if you told someone we'll end flat, well, they would grab it with both hands. India outperformed amidst all the uncertainty. And the FIs, though, they remain sellers. The good point is they're net short on the index. And that could be a bit of a cushion, because that's what helps you with a bit of a short covering bounce, even if flows are negative. The sector of the week was the consumption pack. As Mahesh said, various people are turning positive on that pack. It's been an underperforming space, consumption, FMCG, but for this week itself, it was actually an outperformer. The Nifty ended with a mild negative tinge, while high beta, metals, real estate, they got a bit of a pullback during the course of the week. What works for India? Now there is increasingly, some kind of confidence building into the Indian equity markets after a while. Remember, for India, it's not the first month that we're going through a bit of a downturn. We have been in a broad 9-month correction, actually, a time-wise correction. So we're relatively protected from these US tariffs, because as a percentage, the US goods, the goods that are exported from India to the United States is only 2% of our GDP. Services hasn't been touched as of now. And Trump's commentary as well is not indicating he's going to be very harsh on India. Can't trust what's going to happen, but at least as of now, those are the positives. RBI actions seem to be focused more on growth, which is good. Earnings are expected to compound by around 12 to around 13%. And SkyMet, they came out with their forecast. They're saying that this monsoon is going to be normal. which is actually good, and it could help some of these consumption names as well in the time to come. So India is looking better, Mahesh, and we take heart from the
one thing which you missed out was the oil itself, right?
Yeah. Oh, that's another big
That's from $80 average of last fiscal year to around 60. That's almost like a 20% delta, which is almost like $15-20 billion, right, of savings, right,
Indeed.
which is there. It gives some fiscal room for the government, right, which is a bit of a challenge.
Mahesh, earlier, when we just started off the show, we were talking about 2008. In 2008, we had that spell for around 7-8 months where things were very, very weak, and then you had the Lehman crisis, and in the next 5 months, the equity markets actually started looking up. Right. This time around as well, it's not the first month that we're seeing pressure. Actually, we've gone through 8-9 month, corrective phase. The Indian markets have lost only 15%, but it's been a painful last 9 months actually for investors here in India. Do you think in the next few months things will actually bottom out and then turn around? At that point of time, we didn't have President Trump, so you don't know what he's going to do next. Yeah. But do you get a sense of that?
That's very interesting what you said. In fact, that's what we've been saying. India pain started much earlier. Much because of our own problems. Right? We had a large fiscal contraction because of the elections, right, which was there. The monetary policy also was fairly tight. I mean, a lot of restrictions on the banks. And we saw that pain actually in last fiscal year to some extent, right? And some of those things are actually easing off, right? Whether it's on the monetary side, I think we've seen now the new RBI governor, we've seen 2 rate cuts, right, already. And liquidity, in fact, at the month of March, normally when it is very tight, we had actually a neutral.
Yes.
Or a slight surplus which was there. So I think at least the monetary is trying to support growth, I think, which is a good thing over here. And a lot of the earnings downgrade for us has already happened right, this year. I mean, last fiscal year, I mean, we started off with around 15-16% for the Nifty. Will probably end at around 5% or so, right? In other markets like US, now the downgrade cycle will start now. I mean, they are still sitting at around 10% kind of a growth for this year. So I think we have seen that pain and taken that, and we were about to recover, right? And that's what we're expecting because of this global turmoil. There might be few setbacks in a few sectors, but I think we should see I think next year as we step forward, growth on the lower base should start to look a bit better, right? And valuations, which was the biggest concern last year, right?
Has cooled off.
Nifty has now pulled off in probably a Nifty at least now it's slightly below, I think, the 10-year average.
And and the FI is selling as well, in various markets. They didn't sell so much. Here they were actually selling for quite a long time. And maybe if US is not as strong as people thought, that maybe some of those flows makes their way into some other markets.
I just looking at some data. So FI's ownership in India, right? They are now
at a multi-year low.
Yes. So they are underweight by almost like I think 3% underweight vis-a-vis the emerging market, which is like what they had during the Asian financial crisis. Right? So I don't see there is enough room for them to sell. So I think once the dust settles down, you don't know when it will happen, but there will be a trade out from US, right? I mean, this is a trade short US, both dollar as well as US equities. And it could move into emerging markets, wherever there is a better growth, and India would still have a better growth, right? If not 6.5%, even 6%, for next year. I mean, this fiscal year, that will still be a good growth. I would say that you might see that coming in. It might take some time, not in this volatility, but that's another kind of way to look at it, right? If you want to be positive, these are the positives which one can look at this point in time.
So Mahesh, from that perspective, for the benefit of the viewers, do you think 4-5% downside from here and India see a base there around 21,000 on the Nifty? Is that your base case?
I mean, I would say, one never knows because I think the worst thing is the US gets into a deep recession, right? There is a tariff for Chinese, they use currency as a war, and then it's a different scenario. But another base case scenario, I would say, that's even at these levels, it's becoming an interesting market to look at for investing over the next 3 to 5 years. Clearly, I think you will make normalized returns.
Sorry. Go ahead.
Mahesh, just one thing. Friday, I mean, today we saw a big move, right? And on the way higher. Do you think it was just repair, or do you think, I mean, the correlation with the US starts to break down a little bit here? Or do you think we're kind of still dependent on what happens in the US in a large way?
So I think if you look at even this volatility globally, I think correlation was much lower, right? I mean, if you look at across, I mean, if you look at what happened even in the Asian markets or even in the European markets, our walls were much lower in that sense, right? So that clearly shows that we have got something which is working for us on the domestic side, which is not so much correlated to what's happening in the US. But clearly, I think there is some impact to growth which could be there. And people are trying to factor in whether that impact is going to be 50 basis point or what if US GDP growth goes down to around, say, 0% or so this calendar year, by the end of this calendar year. You might have some impact around 50 basis point to our GDP growth, but that's about it. I think that needs to get factored in a bit in terms of earnings. But I would guess that to some extent, I think India could actually emerge beneficiary out of this, right? As you mentioned, right? I think we would probably we have been classified under the not so, those 4 categories which he has got, right? So where he will be slightly more lenient. And we might, for the first time, actually benefit. Okay, we talked about it eventually, right? If China, right, if clearly the way things are, I think they will not be able to, supply, to the US at those tariffs. So in certain sectors, okay, if we are able to really scale up, and we could actually benefit in the longer run. Currently there could be demand impact, but that's how I would look at it.
Many industries could benefit. I'm just going to take a minute to go back and recap the big global moves that we saw. And it really is, these are historic moves. So guess what the average daily swing in the last 4 sessions on the S&P 500, largest equity index in the world, has been? 7.8%. Wow. Daily average over the last, and we'll find out what it is today. What about volatility? So if you take that April 2nd as a start point, which is what Trump said, Liberation Day, when tariffs were announced, the VIX is up 143%. You can go back and compare GFC, the Greek debt crisis, and many other crises. The only time it's been this high or has gone up in such a dramatic fashion is COVID. Otherwise, this move has dwarfed everything else. Bond markets, again, since April 2nd, Liberation Day, and this is where the problem is. The 2-year is flat. The 10-year is up 26 basis points. The 30-year is up 35 basis points, which basically means that the long end is rising, signaling rising term premium, equity risk premium, which I think is what people are kind of at the margin worried about. The dollar index, which is the broader dollar against a basket of currencies, it slumped 4.5% since the 2nd of April. And now, of course, it's at 100 or slightly under 100. The dollar is not behaving like it should. Neither are US bonds. In times of extreme stress, people go into US assets, which is not happening. It's not happening the dollar here is lagging even the US treasuries in that sense. Basically, the question of safe haven status is coming up once again. What about China? 145% tariffs by Trump. The Shanghai Composite is down just 3% week on week. This week. So that's quite incredible, of course. But authorities are taking measures, and they're out there. I just took one other country, South Korea, which is very exposed to US in terms of trade, etc. Again, historic week. Inside of a week, that market was limit down, then it was limit up. So it's never seen before. So basically, from fear to FOMO, if I can sort of call it that. A few commodities, gold fell 5% high to low from the 2nd to the 8th. It's bounced almost 8%. It's back at all-time highs. Mahesh was talking about oil, 16% fall, high to low, in 6 trading sessions. And I also looked at the Bloomberg Commodity Index, which is a basket. That's fallen 9% in that same stretch. And maybe now it'll start to come back up a little bit. We'll see. That's it. I was on a lighter note. I was, saying earlier that every crisis needs a name. We had the global financial crisis, GFC. The last one 2 years back was SVB, Silicon Valley Bank. There was, pigs crisis, Asian crisis, Greek debt crisis. What should we name this one?
Mahesh?
You can call it a Trump
tariff. TD. Trump tariff. Yeah, TD crisis, Trump tariff.
Yes.
Yeah,
so I put one out. It's called, I'm calling it global trade crisis. There's no Trump.
Yeah.
But if you slip in global, Trump trade becomes GTTC. Doesn't have the same ring to it. So we'll need to find a...
Yeah, I think people remember this for the kind of a short period kind of volatility which we saw, right?
Yeah.
That is.
I think high to low, about 18% fall, actually, for the US.
Right.
Which is smaller than what we saw during COVID and previous instances as well. Short-lived, hopefully.
Right.
And I think the worst is behind us.
I think this still has to unfold, right? We don't know, right? It's still not over in that sense, at least globally, how things will, what are the implications are there? Nobody knows actually, right?
Yeah. So two years later, when we look back and say, what happened in GTC?
No, I think you want a bettering maybe Trump's tariff tamasha. Triple T, no?
It's actually a tamasha because the way flip-flop happened, right? I mean, that's it.
Prashant asked for a better ring, so I said,
T-Cube.
Anyway.
All right, moving on to the other T, TCS. So just before that, TCS came out with the numbers. So on one hand, after the 20% correction in share prices like TCS, Infosys, even the Nifty IT, valuations now getting to long-term average. In the case of Infy and TCS, valuations have now dipped below the 10-year average. So that's on one side. But on the other hand is that there is no growth. You know, Jefferies is now anticipating TCS to grow its top line by 2% from FY25 to FY27 and its EPS by 5%. We're talking about low single-digit revenue growth from FY25 to FY27. So, you know, that's the picture. Valuations may now be looking cheap relatively, but then there is no growth. So what should you be paying for? Also, perhaps investors will wait and watch for Infosys. That's the next catalyst. Now, Infy comes out with its numbers on 17th. Now, you know, before it became a tamasha crisis, there were expectations in terms of guidance. 2 to 4%, 1 to 4%, 2 to 5% at best case for Infosys in terms of an annual guidance. But now the street is feared that will they guide at all, given the uncertainty? And if they don't guide, that means for 3 months or more, you will have no idea what IT companies are growing at. So that is an added uncertainty. And we just quickly pull up the earnings calendar. Next week, Wipro, Infosys, Bastec. And the following week, HCL Tech, LTI, Mindtree, Cyient, LTTS, Emphasis, Persistent, Tech Mahindra, basically the rest of the IT pack. And some key lines from TCS's interview this time. Well, clients aren't panicking. No major deal cancellation or ramped out, but they are seeing some tactical there are some delays in decision making or some tactical ramp downs, as they called. They're pausing on wage hikes. So that's a bit disappointing for all, employees as well. They will decide, they'll take a call when to give wage revisions or increments this year. But they continue to hold on that FY26 will be better than FY25 if you strip out the BSNL, majorly for their international or their developed markets. But Mahesh, come in on tech. What was your positioning? Has it changed in the last 2 months?
Yeah, so tech again has started to underperform even before this, right? Because of concerns about US growth and other factors. So we had been positive on tech earlier, right? Because the sector, which had underperformed, and we were expecting that this year, I mean, say 6 months back, we were expecting last year was not a great year, right, in terms of the top line growth. So this discretionary spend should have been, but that is now kind of a turnaround. But I think beyond a point, I think the tech offers some kind of a support because a lot of these stocks which you talked about, right, while the growth is going to be very, very weak over there, they are compared to the earlier cycle, if you look at it, and now the cash flow generation is much stronger. Yeah. Right? If you look at prior to 18, the growth also there was around in the mid-single digits, right? This time around the cash flow dividend payout, so dividend yields in some of these stocks, large names, are around 4 to 5%. So that provides some kind of a support. Obviously, that at least gives a downside support to some export. That doesn't mean that you might see a big outperformance.
So you're still positive on IT? I mean,
we are kind of a neutral-ish. We are neutral on that sector, right? But I would not go too negative. No? It's already there because it will be too risky to really bet down. Obviously, the mid-cap and small-cap, I think that shift is yet to happen. Mid-cap IT stocks, some of them are still very expensive. Yeah. I think that is the space where you might see some derating.
Mahesh, what kind of valuation you will give as a fund manager to IT companies? Because as she pointed out, 2% revenue growth, 5% EPS growth.
Right.
And a lot of the large cap companies are still quoting about 20 times 1 year forward, Reema. Yeah. So as a fund manager, what kind of valuation you will be comfortable with? Or are you comfortable with this valuation?
I think it's, again, if you look at the FMCG sector, just for example, right, there also the growth is kind of similar, right? Yeah. I mean, if you're looking at the volume growth is around like 2% or so, I mean, for lever it's much lower, right? But you're looking at earnings growth of around in high single digits, right, over there. Again, these are also companies that are giving high cash flow and good dividend yield. I mean, so there the multiples are...
You're comfortable with this kind of valuations?
We are okay. I mean, now with this, with a 10-year average, slightly below that, probably a slight down it could be there. I don't think... the valuations is a question at this point in time. Yeah?
And plus, there is an angle of high dividend yield. Like a company like TCS pays 100% of its profits out to shareholders.
So 4-5% dividend yield is what is for most of the
large cap companies. If we are in a low interest rate environment,
I would not go short on this sector. Let me put this way, right? It might not be a great thing. It might, but that's how I would look at it.
Okay, we'll hold that thought. We'll get into a very short break. We'll come back and tell you what to expect from the rest of the sectors in terms of earnings.
Welcome back. You're tuned into Editors Roundtable. Well, before we move on, the key focus in the next few days and for the next 45 days is going to be earnings. Nimesh, tell us, what do we expect from out there? A couple of companies you're focusing on as well. Run us through the list.
Well, Nigel, at the headline, do not expect any fireworks. That's the broad message from the Q4 earnings. So expect contraction across all the sectors. The revenue growth will be 4-5%, but there will be margin contraction for the first time in 2 years across the board. So the margin expectation is just 0.5% to 1-2% for most of the companies. So that's the kind of margin contraction we're going to see in this quarter. The number to watch in terms of the Nifty EPS for this year and next year. The average Nifty 50 EPS for FY26 is around 1145, 1150ish for 26, and around 1300 to 1315 for 27. So that's a number to watch out. Will there be further cuts in terms of the full year EPS for next year and year after? So that's something which only this quarter earnings will throw up for. In terms of sectors now, which are the sectors which are expected to report weak numbers? Banks will report weaks because of NIM contraction because of the rate cuts. So that's one big sector to watch out for. There would be some outliners is what I believe there. Commodity chemicals is something to watch out for. There will be some inventory pressures. Demand is still muted, and there will be a bit of an operating leverage concerns as well. So that's the commodity chemicals sector. Construction material also expect a weak quarter this time around. And across the board, oil and gas, those are all expected to be weak numbers. So that's a broad 4-5 sectors which are expected to be weak. In terms of strong earnings within the financials, watch out for NBFCs. They are likely to report good numbers. And even for MFIs, the feedback is you will see probably the last of the worst quarters as far as the MFIs are concerned. So that's the one sector which can report good. Healthcare will also expect to report good numbers this quarter. So all those hospital names and all should report good. Metals and mining, the expectation is on a weak base, they will report good numbers. So that's a sector to watch. And telecom is another sector to watch because ARPUs have been increased. So watch out for the likes of Bharti and Indus Towers. For Indus Towers, there's going to be a bit of a dividend play as well in Q4. So they may announce a large dividend payout. So that is something to watch out for. So that's broadly from a sector perspective. Citi puts out some interesting stocks where they expect positive and negative surprises in the earnings. In terms of positive surprises, HDFC Bank can surprise positively. Varun Beverages, that stock was up in today's trade. Citi is expecting 13% volume growth. So one will be the good, strong growth numbers for Varun this quarter. Tata Steel, Citi is expecting strong. Voltas and Eicher are the other two names where Citi expects a good Q4. So that's from a positive surprises. In terms of negative surprises, Titan can surprise negatively on lower margins, and there could be cuts as well in the next year estimate. So that's something to track. Within the IT, watch out for Coforge. That's been the best performing in terms of growth, but now expect some decline there in Coforge in Q4. It could be a quarterly thing, but watch out for that. Vedanta weak, ICICI Pru Life expect weak, and M&M there could be a bit of risk on the weak mix for M&M. So these are the few stocks where Citi expects a negative surprise. But at the margin, no fireworks, a flattish quarter, with a margin contraction the first time in 2 years. That's the overall summary.
A lot of the questioning and commentary will be
a key to watch.
Yeah.
Tariffs will come up in conference calls, Mahesh.
I don't know whether they have the answers.
But we were in the break. We were talking about any sector, particularly which, according to you, has got dislocation, where price is as compared to opportunity. And I think maybe you like chemicals as
I think this is a sector which has underperformed, right, for a long period of time, almost like 2 years now, right? And there was inventory build-up which was there, and that was taking time to kind of go down. While in the near term, because of the global disruption, it could still be impact. But I'm looking at more slightly longer term, right? Again, coming out from China. China is still a large part of the global chemical trade, right? Almost like 28% or so. India is around 5% or so. So whether India can take a larger share, I mean, it's been a talk about it for quite some time, but now probably there is more reality to it, right? Because this war between US and China is not going to end immediately. It is a long drawn kind of an affair. So that probably poses some opportunity for Indian companies, right? Because you will be more competitive, right? Vis-a-vis this thing. So that can be a sector to watch out for. Even for that matter, even textiles, right? Again, a relative competitive position vis-a-vis say Vietnam, this thing, where their tariffs could be much higher once they sit on the negotiating table. So these are opportunities, I think, which can emerge for
play out over a period.
Even in exports.
Okay, it's been a great conversation. Mahesh, look forward to having you more often with us in the studio. Thank you. Newsroom.
Thank you.
Thank you. Well, we're off for 72 hours, but we'll be tracking all the news, the Trump tariffs. So keep it with CNBC TV18. We'll join you bright and early on Tuesday morning. Thank you for watching the show.
Hello and welcome to Business 360. I'm Shireen Bhan. The headlines that we're tracking for you this evening. China increases tariffs on US goods to 125%. Beijing says it will ignore any further tariff increases by the US government. Xi Jinping says there are no winners in a trade war and China is not afraid as he plans to visit Vietnam, Malaysia and Cambodia to strengthen trade ties. The sell-off resumes across global markets as the trade war escalates. European markets trade with sharp cuts. Wall Street futures point to a weak open. Stocks tumble across Japan and South Korea. But China and Hong Kong buck the trend thanks to domestic buying. The sensex and the nifty gained 2% as stocks react to the US pausing the 26% reciprocal tariffs on India by 90 days after a trading holiday yesterday. Both markets end the week in the red as tariff tensions keep investors on the edge.
पहले भी कई बार कहा है कि हम बंदूक रख के कभी नेगोशिएट नहीं करते.
Commerce Minister Piyush Goyal says India will not rush into free trade agreements and refuses to put a timeline. Adds India will not negotiate with a gun to its head. New Delhi is actively engaged in trade talks with the US, European Union and the UK. India is unlikely to offer any unilateral concessions to the US auto industry, say government sources. Officials are considering substantially lower tariffs on imported cars, which cost more than 40 lakh rupees. No final decision yet. Gold prices hit a record high again as investors rush towards safe haven assets. Oil prices fall over demand concerns. TCS sees some minor ramp downs and delays in decision making by clients, but no major project cancellations so far due to Trump's tariffs. CEO Krithivasan says clients are in a wait and watch mode and there is no panic yet. Apple airlifts more than 1.5 million iPhones from India as it looks to avoid the US tariffs. Amazon CEO Andy Jassy expects sellers to pass on the increased tariff cost to customers. Hajmola candy under GST enforcement agencies. Lens, the DGGI is investigating whether Dabur's Hajmola candy should be classified as an Ayurvedic medicine, which is taxed at 12%, or as a candy that would attract a higher GST rate of 18%. Well, the top story this evening, the world's two largest economies are raising the stakes in an all-out trade war. Now, remember, just a day after the U.S. clarified that its tariffs on Chinese goods now stand at 145%, China hitting back. Beijing has now raised the tariff on U.S. goods to 125%. In a statement issued by the Chinese Commerce Ministry, China says it will not react to any further tariff increases by the U.S. Beijing said, and I quote, "Even if the U.S. continues to impose higher tariffs, it will no longer make economic sense and will become a joke in the history of the world economy," end of quote. The statement went on to say, and I quote again, "With tariff rates at the current levels, there is no longer a market for U.S. goods imported into China," end of quote. China's President Xi Jinping welcomed Spain's Prime Minister Pedro Sanchez to Beijing and held bilateral talks. Speaking after the meeting, Jinping said, "There are no winners in a trade war, and China is not afraid," in what was his first reaction to the U.S. tariffs. He's also called for closer trade relations between China and the EU. Jinping will visit neighboring Vietnam, Malaysia and Cambodia later this month to boost trade ties. All these nations have been hit with higher tariffs by the Trump administration. Now, the man who started the tariff war remains unfazed. U.S. President Donald Trump called Xi Jinping a good friend and a smart guy as he expressed optimism about striking a trade deal with China. Take a look.
What happens with China? We would love to be able to work a deal. They've really taken advantage of our country for a long period of time. All we're doing is putting it back in shape. We're resetting the table. And I'm sure that we'll be able to get along very well. I have great respect for President Xi. He's been, in a true sense, he's been a friend of mine for a long period of time. And I think that we'll end up working out something that's very good for both countries.
China has decided to up the ante, raising the additional tariff to match President Trump's 145% tariff. So it's raising this additional tariff on all American goods that come here from 84% to 125%. Again, this would cover all American goods, and it would start on April 12th. Now, the other interesting part of this announcement is this sentence: "Given that at the current tariff level, there's no market acceptance of U.S. imports, if the U.S. continues to impose tariffs on Chinese exports, China will ignore it." In other words, they're saying that they don't believe that Chinese people will actually buy American goods because they would be so expensive with this additional tariffs. So they said that if President Trump does continue to impose tariffs, then China is just going to ignore that. In fact, the Commerce Ministry also echoed that, saying today that China will ignore President Trump's, quote, numbers game. Now, while all of this was going on, China's President Xi Jinping has been courting all different sorts of countries. Today, he met with the Spanish Prime Minister, and he actually invited the EU through the Spanish Prime Minister to help China resist what he described as a unilateral bullying. In addition to that, we've been hearing more reports that the EU is going to be sending leaders here to plan a summit with Beijing, potentially in July. Now, in addition to that, President Xi is also looking towards Southeast Asia. In fact, the government here announced that President Xi is going to visit Cambodia, Malaysia, as well as Vietnam.
Eunice, many thanks for joining us. Important to point out, as Eunice was saying, that China trying to re-engage with the rest of the world. Remember, as the U.S. imposes tariffs not just on foes like China, but on friends, on its allies, there is a vacuum that's been created there in terms of global leadership, and China certainly hoping that it can move in and take some control. Stock markets resuming their sell-off today after temporarily cheering President Trump's 90-day pause on reciprocal tariffs on all nations except for China. Now, U.S. futures are pointing to another weak opening on Wall Street. It's been very, very volatile. European markets turned sharply lower after China retaliated with 125% tariffs on the U.S. Asian markets also saw a sell-off following yesterday's relief rally. But stocks in China and Hong Kong ended in the green, and that was thanks to domestic buying. Back home, the sensex and the nifty gained nearly 2% in trade as Dalal Street reacted to President Trump's 90-day pause on reciprocal tariffs after a trading holiday. Remember, we were not trading yesterday on account of Mahavir Jayanti. The U.S. has paused the 26% reciprocal tariffs, but the 10% increase in the baseline tariff remains in place. That's the sensex, 1,300 point higher. Nifty up by about 429 points, and the bank Nifty and the mid-caps also saw a jump of between 900 and 700 points. But for the week, both the Sensex and the Nifty ending with minor losses as tariff tensions continue to keep investors on the edge. The Nifty Bank Index has lost 1% this week despite Friday's rally. Well, it has been a wild ride for markets across the world this week, and it's not just stocks. Commodities, bonds and forex market have also seen intense volatility. Prashant joins us now to wrap up the week that was for global markets. Prashant, what a week, but we're clearly nowhere close to being done yet.
Well, it's been nothing short of a wild ride on the street across asset classes, across continents. Let's start with the big one, the S&P 500. The average daily swing on the S&P 500 over the last 4 sessions is 7.8%. I mean, that is absolutely a whiplash, and you can call it volatility, but really a whiplash. What about volatility itself? I'm talking about the CBOE wicks. If you take April 2nd as the starting day, which is the Liberation Day, the CBOE wicks from the 2nd to the 8th shot up 143% from low to high. To get to these kind of moves back in the past, you have to go to the dot-com bust, the Asian crisis, the GFC, or the Greek debt meltdown. Now to the bond market. Since Liberation Day on April 2nd, the 2-year yield is flat. The 10-year is up 26 basis points. Remember that Friday, the 10-year got to about 3.9%. The 30-year in this period is up 35 basis points. Basically, the long end is rising and is signaling higher risk premiums ahead. The dollar index itself, the dollar index has gone the other way. It slumped 4.5% since April 2nd, breaking below the critical 100 mark. I mean, the dollar is not behaving like it usually would in times of extreme stress, not like a safe haven. What about China? Now, China is central to this crisis, with Trump trying to correct perceived wrongs with respect to that country. Well, despite the 145% tariffs imposed by the US, the Shanghai Composite is down just 3% week on week. Do remember, though, that what is called the China national team is out there in full force trying to stabilize markets. Let's take a look at a country like South Korea. Big exposure to the US market in terms of trade. Inside of the same week, the Korean stock index hit both limit down and then limit up. It's a historic first for that market, fear and FOMO back to back. Now, a few commodities, gold to begin with. Between the 2nd of April and 8th, gold dropped 5% high to low as everything was liquidated, but then bounced 7.6% to where it is now, and it's hit a new all-time high. Oil got crushed. It's lost 16% high to low in just 6 days. Another casualty, of course, of the macro mayhem. Overall, commodities have had it tough. I looked at the Bloomberg Commodity Index. It's fallen 9% in the same stretch, a broad-based signal of economic concern. So as we sort of head into the 3-day weekend for some much-needed rest, I was thinking that maybe we need a name for this crisis. You know, we have the SVB, the Silicon Valley Bank, the GFC, the global financial crisis, the Greek debt crisis, pigs, Asian crisis, whatnot. So here is my suggestion. GTC, the global trade crisis. Back to you.
All right, the global trade crisis, GTC it is then. Prashant, many thanks for joining us. That's the story across the equity and commodity markets for the week. Now, equity mutual fund inflows fell by 14% in March. According to data released by the Association of Mutual Funds, net equity flows saw a dip of 40% from the peak of 42,000 crore rupees in October last year. Now, despite the sharp decline, SIP inflows have remained steady at nearly 26,000 crores. Gold ETF saw a net outflow of 77 crore rupees as investors booked profits after what has been a bumper rally. Prices of cryptocurrency surging, with the Bitcoin hovering near the $82,000 mark after President Trump reinforced his pro-crypto stance. Now, President Trump has signed a bill to overturn a rule from the Internal Revenue Service, that's the IRS, that classified decentralized cryptocurrency exchanges as brokers. The rule had aimed to crack down on crypto users who may be failing to pay their taxes, so relief there coming in for the crypto markets in the US. Jahangir Aziz, head of emerging market economics research at JP Morgan, expects a recession in the US in the second half of the year due to the ongoing tariff war. He also warned that if US and China trade comes to a halt, it would deliver a shock to the global trading system. Take a look.
So after the pause, we are still sticking with that, second half of the US will go into recession. That was a baseline prior to the pause. That remains a baseline. For global recession, we still don't have it in a baseline, but we have a 60% probability. We haven't changed that probability. US-China trade will virtually freeze. I mean, unless you critically need something, you are not going to participate in any transaction between US and China. Most of the trade that India does outside of US and China is also related to the supply chain that goes through US and China. So if the trade between US and China comes to a halt, this is a actual shock to the global trading system. So if global trade is under attack and global trade actually stumbles in the next 2, 3, 4 months before, let's say, we have a negotiated compromise, then I do not think that emerging markets growth gets spared.
Jahangir Aziz there of JP Morgan. IT giant TCS reporting its Q4 earnings yesterday. It did miss street estimates on both revenue, profit and margins. When asked about the impact of tariffs on the company, COK Krithivasan said the company was seeing some minor delays in decision-making by clients, but no major project cancellations so far on account of the global uncertainty. Krithi added that customers are in a wait-and-watch mode, but there is no panic yet. Take a look.
Many of our customers are also in a wait and watch mode in terms of what is the end game going to be. But good thing is, like, whatever we are seeing so far, as much as a rhetoric, we have not seen our customers panic. Like there are maybe some programs what we thought that they would kick off, but some delays in decision making. But we have not seen any major cancellations or no major project ramp downs. Like there are few, but no major. So I don't think there is any major negative reaction.
Well, that's TCS. Commerce Minister Piyush Goyal has said that while India has been talking to the US, UK and the European Union for standalone FTAs, that's free trade agreements, the country will not be rushed into an agreement. Speaking at an event today, Goyal said that India will not negotiate with a gun to its head. Abhimanyu joins us now with more details. Abhimanyu, where are things currently in all of these ongoing negotiations on these 3 FTAs? And, a lot of speculation on advancing the timeline and so on and so forth. What are you hearing?
As per the current estimates, India had exported total goods and services worth $820 billion in the previous financial year, which was a 6% year-on-year increase from the previous FY. India is intending to increase exports further this year. However, several challenges do remain with respect to imposition of tariffs and reciprocal tariffs, also uncertainty in global demand and geopolitical challenges which continue to persist. So India, of course, is exploring newer geographies. What the Commerce and Industry Minister had indicated that though a timeline is usually ascribed to sign FTAs, but an FTA cannot be signed forcibly to adhere to a timeline while forsaking national interests. So India continues to remain engaged in trade negotiations with several geographies, including the United States, with the EU, UK and also several Latin American countries. India is also trying to increase the overall mix of its exports by including more processed goods, more agricultural goods, and more importantly is trying to hedge the risks emanating from a possible fall in demand in several developed economies by possibly looking at places in Latin America and Africa to increase its exports to in order to hedge the risks emanating from a fall in demand from several OECD countries.
हमने पहले भी कई बार कहा है कि हम बंदूक रख के कभी नेगोशिएट नहीं करते. समय की पाबंदियां अच्छी रहती हैं कि वो प्रोत्साहित करती हैं कि तेजी से बात हो, लेकिन जब तक देश हित और जनहित को हम सुरक्षित ना रख सके तब तक कभी भी जल्दबाजी करना अच्छा नहीं है.
That's the Commerce Minister. And staying with tariffs, sources tell CNBC TV18 that India is unlikely to offer unilateral tariff concessions to the US on automobiles. However, the government could lower tariffs on imports of cars worth 40 lakh rupees. And Abba Parikshit is standing by with more on the government's plan. Parikshit.
Well, India's tariffs on the automobile industry have taken center stage in trade negotiations with US, UK and EU. And for many nations, when it comes to auto tariffs, it's really a make or break situation when it comes to a deal. Sources say, despite the pressure from the US government, India is unlikely to offer any unilateral tariff concessions to the United States in the automobile sector, where the highest tariffs on import of fully built cars is around 100%. The Indian government's focus right now is to reach an early understanding on the bilateral trade deal with the US and get a reprieve from America's 25% tariff on the auto tariffs. But sources say the government is considering lowering tariffs substantially on imported cars, and there is a strong intent to do so as well. The government is considering lowering tariffs on import of premium cars from US, which cost above 40 lakhs with a fixed quota per annum. The government is right now exploring different scenarios to offer tariff concessions on imported cars, but the final decision is yet to be taken. Tesla's India entry would also be contingent on India-EU FTA, as cars would be imported from Berlin and not from the United States. And Tesla would wait and see the kind of tariff arrangement India and the EU reach as well. India would have to offer the same tariff cuts in the automobile sector to US, UK and the European Union, as all three have sought auto tariff cuts. Even response to India's scheme for manufacturing electric cars is likely to depend on tariff cuts offered to US, EU and the UK. While the scheme offers 15% concession import duty over the 100% currently imposed, companies have to commit to making in India with a $500 million investment. Guidelines for the scheme are yet to be issued, and all car makers would first like to see India's tariff cuts before applying for such a policy.
Well, Parikshit, many thanks for joining us. Now, former White House official Lisa Curtis believes the Trump administration paused the reciprocal tariffs because the strategy backfired. Curtis was part of the first Trump administration, and she spoke with Parikshit on the tariff blitz and the mood inside the White House. Listen it.
It hasn't made a lot of sense to people why he would do these broad tariffs on so many nations, including allies and partners. And I think it did backfire, and that's why he has stepped back and he's put on this 90-day moratorium. Elon Musk was very clear that he disagreed with this strategy, and he wanted to see the U.S. negotiating. And, you know, I think it's good that he came out and gave another perspective to this Peter Navarro pro-tariff perspective. So, you know, in that case, I think some of the infighting within the Trump administration played out in a way that helped the United States in the end, because it did, you know, finally lead President Trump to back off.
Lisa Curtis, who was a member of the White House administration under the first Trump innings. Tech giant Apple has airlifted 600 tons or 1.5 million iPhones from India in a bid to beat the new tariffs, according to a Reuters report. Apple shipped about 1.5 million iPhones in cargo weighing roughly 600 tons. The tech giant has been ramping up production in India, which has far lower tariffs compared to China, but Apple continues to make most of its iPhones in China and has not announced any plans to scale back its plans. Amazon CEO Andy Jassy said that its third-party sellers will likely pass on the cost of increased tariffs to consumers. In an exclusive conversation with CNBC, Jassy also added that they have not seen a meaningful shift in consumer behavior yet. Take a look.
I'm guessing that sellers will pass that cost on fully. Yeah, I think they'll try, and I understand why. I mean, depending on which country you're in, you don't have 50% extra margin that you can play with. So I think they'll try and pass the cost on. And you know, as I said, it's so early right now, but we haven't seen any change in consumer behavior in a meaningful way yet.
Andy Jassy there for Amazon, and as he's rightly pointing out, a bit premature at this point in time to talk about any particular trends on account of the tariffs. But up next, Hajmola Candy under the GST Enforcement Agency's lens. We'll tell you why when we return. The big macro data of the month, India's industrial output grew by 2.9% for the month of February. That's lower than the 5.2% growth in January. Manufacturing and the mining sector have seen a bigger slowdown compared to other sectors. So that's the latest there as far as IIP is concerned. Shifting focus to sovereign gold bonds, the government has covered almost 50% of the underlying liability for gold held under the scheme at the current market price. Sources tell us that the Gold Reserve Fund has sufficient balance to manage redemptions for the next 3 to 4 years. Sapna standing by to take us through the details. Sapna.
Absolutely. What we're getting to hear as a clarification from government sources is the fact that around for the next 4 to 5 years, the Gold Reserve Fund, carries or has sufficient monies to take care of any redemptions that will be coming through under the sovereign gold bonds. Having said that, the numbers that have been put out are absolutely bang on. Basically, 130 odd tons worth of gold is being held under the sovereign gold bonds, and sources are claiming that around 60 to 65 odd tons worth of sovereign gold bonds carrying that much of underlying gold, are up for redemptions over the next 4 to 5 years, and that is what the government has basically covered. They are fully covered is what sources are claiming. So that's one aspect. The second aspect, however, we need to keep in mind is that all of this is, of course, happening at the prevailing market price. So, sources are indicating this at what the current gold rate is. We really don't know where gold is going to settle over the next 4 to 5 odd years. And the way the rally has happened, that's something that we need to keep in mind. Last but not the least, look at the amount of funds that have actually gone up in the Gold Reserve Fund from the government side. So in FY24 actuals, it was just around 3,500 odd crores. That number in the last financial year has jumped to 28,000 crores. So that basically indicates that sovereign gold bond story is not as simple as it appears to be. There is a lot of money that the government has kept aside for the same. Since these are sovereign bonds, there cannot be any question of any kind of a default. As of now, as per sources, they are covered for next 4 to 5 years worth of redemptions, but we'll have to keep a watch on how that prevailing market price of gold behaves.
All right, many thanks. On to CNBC TV18 exclusive. Hajmola candy is under the GST Enforcement Agency's lens. Now, here's why. Sources say that the DGGI is investigating whether Dabur's Hajmola candy should be classified as an Ayurvedic medicine, which is taxed at 12%, or as a candy that would attract a higher GST rate of 18%. Timsy is standing by with more. Timsy, medicine or candy?
Well, Dabur India and DGGI are at loggerheads. What we are given to understand from sources is that Dabur's Hajmola candy is currently under DGGI scanner. The Directorate General of GST Intelligence is investigating the classification of Hajmola candy under the GST regime. To be precise, DGGI's Coimbatore zone is currently investigating whether Hajmola candy should be treated as an Ayurvedic medicine, attracting 12% GST, or as a candy under 18% GST. Dabur, during the investigations, claims to DGGI that Hajmola candy is an Ayurvedic medicine and not a regular sugar-boiled candy. Meanwhile, email queries sent to Dabur India remains unanswered, and Dabur, also important to note here that Dabur in the pre-GST regime faced a similar challenge through Supreme Court, and it had got clarity in the favor of the company, stating that Hajmola candy is an Ayurvedic medicine. Also important here that Dabur is already facing a tax demand. Dabur on 1st of April disclosed that it has received an income tax reassessment order demanding 110.33 crores for financial year 17-18. The Income Tax Authority alleges that Dabur made incorrect claims for tax deduction related to in-house research and development under Section 14A of the Income Tax Act. Meanwhile, Dabur said that it plans to challenge the demand. So let's see what happens finally, whether government actually goes back to the council to change the classification of Hajmola candy, or the previous Supreme Court ruling comes in the favor of Dabur when it comes to this particular DGGI case. Something that we'll have to wait and watch for.
All right, Timsy, many thanks for joining us. Well, with that, it is time for us to wrap up this edition of Business 360. The news will continue right here on CNBC TV18. Stay tuned. We're back in a moment with more. Well, let's now focus on CNBC TV18's Future Female Forward campaign. Rachna Dhanrajani caught up with Mantra for Change founder Khushbu Awasthi on the sidelines of our Mumbai event, a Bengaluru-based NGO. What is this Entra for Change? Mantra for Change. Na? Entra kya hai yaar? Chalo. Let's now focus on CNBC TV18's Future Female Forward campaign. Rachna Dhanrajani caught up with Mantra for Change founder Khushbu Awasthi on the sidelines of our Mumbai event. A Bengaluru-based NGO, Mantra for Change is pushing the envelope to close the learning divide. Here's that chat.
Hello and welcome to News Center. I'm Parikshit Luthra. Trump tariffs, trade are top focus this evening. The world's two largest economies are raising their stakes in an all-out trade war. Just a day after the US clarified its tariffs on Chinese goods now stand at 145%, China has hit back. Beijing has raised the tariff on US goods to 125%. In a statement, the Chinese Commerce Ministry said it will not react to any further tariff increases by the US. Beijing said, and I quote, even if the US continues to impose higher tariffs, it will no longer make economic sense and will become a joke in the history of the world economy. End of quote. The statement went on to say, and I quote, again, with tariff rates at the current level, there is no longer a market for US goods imported into China. End of quote. China's President Xi Jinping welcomed Spain's Prime Minister Pedro Sanchez to Beijing and held bilateral talks. Speaking after the meeting, Jinping said there are no winners in a trade war and China is not afraid in what was his first reaction to the US tariffs. He also called for closer trade relations between China and the European Union. Jinping will visit neighboring Vietnam, Malaysia and Cambodia later this month to boost trade ties. All these nations have been hit with higher tariffs by the Trump administration. The man who started this tariff war remains unfazed. US President Donald Trump called Xi Jinping a good friend and a smart guy as he expressed optimism about striking a trade deal with China.
What happens with China? We would love to be able to work a deal. They've really taken advantage of our country for a long period of time. All we're doing is putting it back in shape. We're resetting the table. And I'm sure that we'll be able to get along very well. I have great respect for President Xi. He's been, in a true sense, he's been a friend of mine for a long period of time. And I think that we'll end up working out something that's very good for both countries.
Tech giant Apple has airlifted 600 tons or 1.5 million iPhones from India in a bid to beat the new tariffs, according to a Reuters report. Apple shipped about 1.5 million iPhones in cargo weighing roughly 600 tons. The tech giant has been ramping up production in India, which has far lower tariff levies compared to China. But Apple continues to make most of its iPhones in China and has not announced any plans to scale back in China. The Wall Street Journal Asia's business editor, Peter Landers, joins us now. Peter, first of all, the kind of trade tensions between China and China and the US at this point. China has said that any further tariff increases by the US will just be a joke. They're not practical anymore. How do you see the war escalating? And what are some of the measures that you expect China to take in the coming months?
Possibly the war is finally coming to a close. I'm not sure, but at least China suggested, as you mentioned, that they won't retaliate in terms of higher tariff levels anymore. And the suggestion was really that the tariffs have gotten so high against American goods that it would be very difficult to sell anything American in China anymore. So why bother to retaliate tit for tat, as has been happening so far? And I think the same probably is true of U.S. tariffs on Chinese goods. Now at 145%, it really makes it uneconomical to send anything from China to the U.S. And that's why we see Apple trying to ship more iPhones from India instead of China. And so I think rather than escalate further, China certainly would love to take Trump up on his offer and sit down at the table to try to make some kind of deal that might incorporate other issues dividing the two countries, such as the app TikTok, which is banned in India and I believe is subject to a potential ban in the United States.
Right. Peter, what's your sense? Do you expect Apple to import more, maybe invest more in manufacturing and deepening its linkages with India?
I do. I think they have no choice unless there's a deal very quickly between the U.S. and China and the tariffs go back to where they were before Trump became president for a second time. Then Apple would probably try to stick closer to the status quo. And there is a lot of uncertainty about what Trump will do because his tariff policies have changed so frequently, sometimes day by day. So there is uncertainty, but in general, the trend for Apple has already been to increase production in India, perhaps by some estimates we hear, perhaps 15% or more of the iPhones this year will be made in India. And where possible, I think they will try to export more from India to the US to avoid those tariffs.
Right. One more final question, if I would ask you. Now, we will see Xi Jinping making this trip to Malaysia, Vietnam, Cambodia. What's going to be the kind of foreign policy approach that Xi Jinping could take? Now, the worry is that the space that is being vacated by the US, it will be taken up by China. And do you think China is rushing for that opportunity right now?
They're definitely grasping for that opportunity, meeting more officials from the European Union. And we saw the Spanish Prime Minister in Beijing just today, and Xi Jinping telling Pedro Sanchez that we want to have closer ties, presenting China as a reliable, steady, consistent partner that's, clearly making the distinction with the United States. And I'm sure he will deliver that same message when he visits Southeast Asia next week.
Right. Thank you so much, Peter Landers, for joining us and giving us your view on the tariff escalation between US and China and the kind of foreign policy approach that Xi Jinping is now taking in response to US tariffs. And staying with the United States, US Vice President J.D. Vance is likely to visit India soon for trade talks. Sources say more visits by Indian officials to the US is also on the cards. However, sources tell us that a bilateral agreement with the US may not materialize by this fall. Abhimanyu Sharma gets us more.
Amidst the global discourse on reciprocal tariffs, sources have indicated that it's difficult to have a BTA, that is a bilateral trade agreement between India and the US in 90 days. However, the shape and form of the BTA may be finalized in a period of 90 days. Also, India remains in constant engagement with the United States, with the EU and several other geographies. And it's likely that more Indian officials may visit several other countries and geographies in the coming weeks to finalize negotiations or to proceed for a trade deal. Sources also added that there is a likelihood of trade diversion from various countries, including China, where it's possible that there are excess capacities for exports due to a fall in overall demand of imports from several OECD countries, as well as imposition of reciprocal tariffs by the United States on China. Hence, the Customs Department has been asked to keep an eye on any unusual surge in exports or imports from India to check if any trade diversion is being undertaken from India. Sources added that government has also cautioned the industry that India will not be a source of trade diversion, and the industry needs to prepare for a time of zero tariffs or no tariffs and to ensure that there is no protectionism. Sources also added that protectionism may save 1,000 jobs, but it may cost 140 crore Indians dear by breeding inefficiency. It remains to be seen how early the negotiations are going to take place between India and several other countries, while it's also likely that US Vice President J.D. Vance may visit India in the coming weeks.
All right. Thanks, Abhimanyu, for joining us. Now, the president and CEO of the US Semiconductor Association believes the current global environment favors diversification of the supply chain. I spoke to John Neufer on the ongoing trade war and its implications for the semiconductor industry and also India.
Certainly, we're in a kind of disruptive time. But it's in times of disruption that there's often many opportunities. And so we see some real potential here in India. Over the last couple of years, for example, there have been 6 new semiconductor projects announced. That's very positive. And now there's 2 vectors for change in this technology cooperation agreement called TRUST and potential bilateral trade agreement, or BTA. We think those 2 mechanisms working together can create a stronger ecosystem here for our investments on the one hand, to help India become a bigger part of our supply chain, but also creating greater market access for our technologies in India.
Right. Do you see more investments coming into India from US companies in the next, say, 12 to 24 months? You spoke about 6 companies. You've got the likes of Micron, AMD, which have operations which are expanding. Are we going to see more?
So I don't run a semiconductor company, but I would just speculate that two things. One, the broader geopolitics suggests there's going to be increased movement toward diversification and more opportunities for India. But India still needs to make the business case. There has to be the right ecosystem here, whether it's regulatory or trade or standards, that make sense for us to invest more here.
Right. Now, speaking about the expectations of the US government, one, of course, a company will invest if there is a business case to do so, and the regulatory environment and the tax environment is viable for them. Secondly, one is a political intent. Is there now a greater push from the US government to make sure that US semiconductors or US made chips and technology has greater access in India?
Yeah, so no doubt kind of the leaders meeting in February and the government's talking about a bilateral trade agreement create very positive atmospherics for us. But at the end of the day, we have to run businesses, and so you have to have the right business environment here for that to happen. I think if you kind of look broadly, the overall trends suggest there's going to be more of our participation in this market. What I'm hopeful of is that India seizes the opportunity and undertakes the change and reform that's necessary to really grab the opportunity and make the most out of it.
Currently, India and US are negotiating a bilateral trade agreement. How beneficial is that going to be for businesses on both sides? Indian experts are actually calling on the Indian government to reduce tariffs on 90% of industrial goods to zero. What would be the best case scenario that you would be looking for and expecting from the BTA?
Zero tariffs would be wonderful. Our industry is possibly the most global industry in terms of supply chains that's out there. We have parts and components that are and finished products that are moving across the borders all the time. That's both to build fabrication facilities or fabs, but also to run them. And we need zero tariff treatment at the border, and we need customs clearance facilitations that's smooth and quickly. And if India can provide that, it'll make a big difference.
Right.
So through a bilateral trade agreement.
Right. There is a window of opportunity when it comes to semiconductor manufacturing, but it will not be there forever.
So what's happening more broadly is that we're now about a $600 billion industry globally in terms of sales. We're probably going to be $1 trillion industry by 2030. And it's a 8% growth every year. If you do the math, we get to $1 trillion. It's being driven by AI. It's being driven by autos. So the reality is we need to get a lot of infrastructure in place now to feed that future demand. And the good news is for India, it's not, for our industry, it's not a choice of India or somewhere else. The ideal outcome is India and somewhere else, because the pie is growing for the world, and that means each piece of the pie can be bigger if the right ecosystems are in place.
You know, one thing that we hear wherever tariffs are going up, even in India, we're hearing that companies in the US are either canceling orders or they're seeking greater discounts. Do you expect?
Well, I think not just for semiconductors, but I think that's a concern for all industries. Is that trade slows down, and not the ideal outcome.
Right. And finally, on US-China tariffs, even though the US president has put a pause on reciprocal tariffs while continuing the baseline tariff, the tariffs on China have been increased to as high as 145%. How bad is that going to be for the semiconductor industry?
It's not just that. That's not just that. China has slapped back with its own tariffs.
Retaliation, especially.
Yeah. So again, China is obviously a very important market to us in the industry, and again, we're in a wait and see mode, and hopeful that the two countries can find a way out of this so that we can get these tariffs out of the way.
John Newfer, thank you so much for speaking to us here in New Delhi. And let's see how the semiconductor industry progresses this year in light of the global trade uncertainties.
Good
Thank
to spend
you
time with you again. Thanks, you.
John.
Thanks very much.
Time now for a break, but up next, an exclusive conversation with Shobna Kamineni, Apollo HealthCo's executive chairperson, on the other side. Launched during COVID-19 pandemic, Apollo 24/7 is clocking 3,000 crore rupees in revenue and will hit a profitability mark by Q4 of FY26. That's the word coming in from Shobna Kamineni, Executive Chairperson, Apollo HealthCo. In an exclusive interview, she unveiled the growth strategy for Apollo 24/7 and how the digital offering could potentially contribute to 50% of the revenues of the Apollo Hospitals Group.
I think that Apollo Hospitals, we saw that there was a necessity as our, as capacity of most of our hospitals is close to about 75+%, and we had to move into that new expansion. And I think my sister Sunita is always very cautious, but at this point, we were able to actually get some really fine properties, whether it's Gurgaon, Pune, Mumbai. So these are cities that we didn't have enough presence in, and moving there, and of course we're expanding in Chennai, doing another one in Hyderabad. So these are cities that we really have a strong presence. So going deeper into cities that we are and moving into other new cities. So yes, there's some exciting expansion happening in Apollo.
Right. If you can give us some numbers to quantify that, how much would you be investing in this expansion in FY26, and what is the overall bed capacity that could increase as a result?
So we're looking at increasing about 2,500 to 2,700 beds, and of varying investments, because some of them are really high tech, from things like a proton to a tertiary type hospital to just augmenting some of our secondary. So with all that, I think we're looking at something of over the next. We started last year, so the cycle of it, the investment cycle, would be anywhere in the range of 3,000 crores.
Okay. Speaking about the story of Apollo 24/7. This enterprise is now completing about 5 years. Could you give us a sense of the journey so far and the contribution of Apollo 24/7 to the larger group?
I would think the journey of the last 2 years is just refocusing on our customer, saying that how do you serve these customers better, and then more will come in. Today, like last year, we did about 330 million transactions, both physical and digital, online, offline, from the pharmacy. So how does this happen? It's just that people start trusting you, and this, the app has become so much better. I used to go on saying, I can't use this app, but now I look at it and it's really something that I go to, because not only do I know that I'll get my medicine, whatever I want, I'll be able to get it in within a day. So here in Gurgaon, 19 minutes, and in Delhi, 19 minutes, Hyderabad, 19. So then, because we sat down with the team and we said, look at these guys, what's this? Do you have that capability? Because we have 6,000 stores. And they went back and they said, yeah, we can do it. But then we put a caveat saying, you're not going to lose money doing this stuff.
Yeah.
So then they said, okay, it's a little harder. Just give us 5 minutes more. And so I said, why 5 minutes? Let's take 9 minutes more instead of 10 minutes. Do it in this thing. And the guys really are making that work. So between a 19-minute to that same day delivery, in about 3 months, 90% of anything you order with us is going to come. And that's what I love.
So by when do you expect to be profitable on a consistent basis?
Q4
of FY26. Q4 of FY26. And
25-26, yeah.
Right. And could you also give us a sense of the kind of profitability you are looking at right now, the kind of margins?
So, as you know, when we were just running the pharmacy, we were doing really well.
Right.
We had almost like a 7.5% margin, EBITDA. Compare that with who would look like us, MedPlus. So MedPlus is about 2.5-3%. So we were doing 7. So just the ability of our organization. Then of course we started investing in this. Started investing a lot of money, and in that process, so you know, this has been this has been tough cycle. I think we'll come back and more. So this has an ability to actually do more, and probably we should be doing it at about 8%.
Right. What I would also like to ask you about the importance of Apollo 24/7 in the larger Apollo Hospitals Group and Apollo Hospitals enterprise. Could you give us a sense of how much would the company want to invest in expanding in this digital business all across the country?
We are across the country, and the investment cycle is over.
Yeah.
Really, quietly, 5 years. We've invested about 600 crores in the actual tech and making all this happen. You know, the capability of the whole product. But we also, you know, altogether it was around 2,000 crores, which includes the losses that we managed to contain but had to spend. So this investment cycle is over. From last year, actually, it's not unit level positive of the digital, but overall it's profitable.
Right.
So Apollo's invested a lot, and tech is such that, you know, and pharmacy and all these are such that they're regular investments. We open two stores a day. So these are all investments, but they're not super large like a hospital investment, but and these continue to create the road. Just look at us. For the last 20 years, we've grown at a CAGR of 20% plus. But the nice thing about this, about what keeps me, really coming to work every day, is that I see that there are new things that I can continue, that this is in India where you can grow at another 20%.
You know, we've been hearing that you're likely to launch a new intuitive AI tool for Apollo 24/7. Is something like that on the cards?
Ask Apollo.
Ask Apollo.
It's an agentic, this word agentic is like suddenly very sexy, but truth is it really works for you, because why would you want to search on ChatGPT, which is so generic, or on Google or any of these? And Google also believes that, because they said, yeah, it's true. When you can search, if we have your health records, we know who you are, what's your age, basic stuff. But more than that, we know some of your deeper conditions. So otherwise, when you search, every fifth search tells you something scary. But this is not the case.
Right.
For you, every by the third time, it'll actually give you an answer and give you an opportunity to act on it. Do you want to see the doctor?
Right. You know, this definitely is a priority for you, ma'am. But in the next, say, 5 to 10 years, how do you expect Apollo 24/7 to contribute to the overall revenues of the company as a group? How will this be? How big will this business be for you?
I think the business will be such that it's already clocking 3,000 crores of revenue. So this revenue is growing at 30%. So they have a faster trajectory just because, you know, I think that all digital first businesses really are still, they're in the growth phase of India. And then once you get to an inflection point, I see probably that'll be almost 50% of our business, you know, going forward. So for the next 10 years or something, this will continue to propel as India becomes more digital first, that they understand the usage of it. It becomes a lot easier. My physical presence is still super important, but I think the fact that we can be truly omni is a capability that very few people have, even around the world.
Now, speaking about the weight loss industry, we were chatting about it as well. So many of these weight loss drug manufacturers are making their way to India. How big a industry would this be, and how do you expect to leverage that as well?
Walk around. Just think, you know, Indians are no longer that picture of starvation. So many people, you know, whether it's the wealthy to the, you know, this weight thing has no class distinction, you know, except if you're really on your feet all day. And I love the way that, you know, this physical labor, they manage to stay thinner and healthier. But that's not true in urban areas where you have, you know, this, everything is there, no places to play, kids are putting on weight, and people still want to look good. We still have that thing that, you know, you have to look, that you have to be fair, that you have to be thin. And, you know, these are the big two things. So I think that's the case for abuse, but the case for use is really people who have type 2 diabetes, that have conditions that this is proven to help. And India is such a huge diabetic capital. And if we just use that to start helping people, you will see that their longevity, that their quality of life, everything will improve. So I do think managed well, this is such a boon for the country. And it's come at a great price point. It's not the kind of pricing that was there in the US, because it's going off patent. There are 4 Indian manufacturers that are going to come out with it by the end of the year or early next year. So this thing is going to become rampant. The problem for us is, how do we make sure that, you know, anything good in excess actually becomes an evil? So how do we prevent that? That's my worry. And I think that's the challenge of what hospitals and good doctors and everything will be, is that this is not something that you should walk and buy off the counter. It should be prescription backed. It should be, you should be monitoring it, because we still don't know, right? It's been around only for about 5-6 years. So we need more clinical evidence to say what are the secondary problems.
Right. Ms. Kamini, thank you so much for joining us here, telling us about the story of Apollo 24/7, the larger expansion plans of the group as well. It was fantastic.
Thank you, Parikshit. Thank you.
you work at a very grassroots level. You start very young. Is there any initiative that you think should be taken when kids are young to sort of imbibe this whole equality and diversity theme when you can in school as a part of education?
No, absolutely. I feel school is the best place to get started with these conversations, because when as a boy and a girl they're sitting in the same classroom, the whole discrimination starts beginning from there. For example, if there are some outdoor activities, the teacher would be far more likely to call out boys to go out and play, right? So how do we catch these things very early on and actually encourage consciously among educators, among parents, to say you have to encourage your girls to participate in such activities which requires maybe physical activities that may require staying outdoors even in late hours. I mean, I come from Bihar, and I remember throughout my childhood I was never allowed to step out of house after 5 p.m. And that meant really losing out on so many wonderful opportunities. And if we can do that in school, I think girls will grow up with that confidence to say, hey, I can do things. In the panel right now in this event, I think Amira was sharing how girls don't take up sales jobs. That's precisely because of this. I'm so afraid to step out on the field. What if something happens? What if someone tells me something? I think these are just mental barriers that we have to overcome, and schools are the best places to work on those things.
Right. From safety perspective, of course, while growing up, all our parents said that you have to be home early before sun. But it's also a part of the societal conditioning that don't go out, you'll probably get dark-skinned or something. And those are the kind of additional barriers that a woman has to go through, and then to be told that, oh, you're beauty with brains and all those things being said. What do you think can be done against this conditioning? Because as women, we also sort of fall for it and become the watchdogs of this conditioning.
I think that's a very loaded question. Again, going back to the idea of social conditioning, right? Like as I think as parents, as mothers, we have to really change our own perspectives. And I think what's helping is having role models. Now there are people in every area, like whether it's sports, movie industry, or education, technology. We have women who may not be fair-skinned but are doing amazing and are helping at really playing amazing leadership roles. So just celebrating those stories a bit more, showing what real success and real leaders look like would really help change these norms.
Well, in our society, we also look at women as somebody who would go to a different house, right? When you grow up, you have 2 houses to manage, and then your husband's home is your home. All of that, how do we break away from that and say that, no, your life is your life, and then there are additional people in it?
I don't think breaking away is a solution. It's more about how do we bridge the mindsets. In my personal experience, I think my mother-in-law has been the biggest support that I could get after getting married in terms of how I'm able to balance my work and, life at work and life at home. It's just having those conversations, showing them, engaging them that what success means to me and what joy, how would I gain joy. And if I take them to my work environment, if I make them meet my stakeholders, my supporters, and when they tell very proudly that, hey, your daughter-in-law is doing great and she's such an amazing leader, I think they also start kind of imbibing that sense of pride. So again, I would just say, don't break away, bridge in, bring people along, and make them into your champions.
Right. Now, you've been doing a lot when it comes to kids' education, be it through partnerships or be it through your own initiatives. How do you think the landscape is changing in terms of the education system that we have, the new education policy? Where do you think this is going forward?
One, I think particularly with respect to gender equity, it's very, very heartwarming to see that at least today when a girl is born in a family, the parents are not asking whether or not to send that girl to school, right? So that has definitely changed, and that's a huge success, huge milestone to celebrate. I think in terms of when girls start growing up and when they reach the age of say 11, 12, 13, that's where the dropout problems start to creep in. And again, a lot of reasons. One, infrastructure in the school. Sometimes there could be issues related to the availability of toilets. There could be issues about eve teasing. We have been doing these statewide projects, especially in states of Bihar, UP, Odisha, and society has a big role to play. The moment somebody says, hey, you are struggling a bit, rather than saying, how do you cope with that challenge or how do you navigate the situation, they say, come out. whether it's family situations like taking care of younger siblings, girls are the first one whom parents say that, hey, it's your responsibility. You have to take care. You have to support family. I think these are just very, very deeply seated mindsets that need lot of support, lot of hand-holding to be come out of. And but the good news is that many of non-profits, for-profits, organizations that are really wedded to the idea of gender equity and are consciously working on these aspects.
Right. Thank you so much, Khushbu, and good luck for bringing this change about that our society definitely needs.
All the best for this wonderful initiative.
Thank you so much. You work at a very grassroots level. You start very young. Is there any initiative that you think should be taken when kids are young to sort of imbibe this whole equality and diversity theme when you can in school as a part of education?
No, absolutely. I feel school is the best place to get started with these conversations, because when as a boy